You ever see those headlines about national debt hitting some astronomical number, trillions and trillions of dollars, and just stop and think, wait a second. If every single country is in debt, who exactly is everyone borrowing from? It feels like a total paradox, right? Like a giant global IOU where there's no one left to actually hold a note. Well, today we're going to untangle that very mystery. Let's get into it.
And that really is the question, isn't it? It's a completely logical thing to ask, and it gets right to the very heart of how our whole modern economy is wired. It honestly sounds like a riddle. If everyone's a borrower, where did all the lenders go? The answer, it turns out, is both way simpler and way more fascinating than you'd think. And it's been hiding in plain sight this whole time.
So, we start with this puzzle. The whole idea of universal debt just seems to break the rules of basic math. But what if we've been looking at it all wrong? What if we're not supposed to be looking for some single, all-powerful creditor? What if the whole system isn't about one entity lending to all the others, but it's actually a huge interconnected web of promises?
Yeah, that quote, it really nails the feeling a lot of us have about national debt. We know it's a tool governments need to use, but the sheer size of it all can feel, well, pretty overwhelming. So to understand who gets the bill, we first have to really understand the deal. What's actually being bought and sold when a country takes on debt?
And that brings us to the absolute heart of the matter, the government bond. This is it. This is the main tool, the financial gadget that makes this whole global system of borrowing and lending even possible. You can think of it as the world's most official, most reliable IOU.
So what exactly is a government bond? It's actually pretty simple. When you buy a bond, you are literally lending money to a government. That's it. And in return for your cash, the government makes a promise to pay you back the full amount on a certain date, and all along the way, it'll pay you these little, regular interest payments. It's considered one of the safest investments in the world because, well, it's backed by the government's power to tax everyone.
To really get this, let's compare it to something you probably know better: stocks. When you buy a stock, you're buying a tiny piece of a company. You are an owner. You share in the profits, but you also share in the risk. With a government bond, nope, you are a lender. Your role is totally different. Your return isn't some potential moonshot. It's a predictable, guaranteed interest payment. And that safety is everything.
I love this quote because it sums up our entire modern economy. We literally moved from a system that was backed by a physical thing, gold bars in a vault, to a system that's backed by something you can't even touch: trust. A government bond today is just a digital entry on a computer screen. Its value comes entirely from our collective belief that the government will make good on its promise. That shared trust is the bedrock of the whole system. Okay, so with that all laid out, we can finally get back to our big question. Who is the creditor? Well, the answer isn't a who, it's a what. It's not some shadowy figure or a single bank. It's a vast, sprawling network of millions and millions of different people and institutions, all holding these government IOUs. Take a look at this chart. It breaks it down really nicely. And here's the part that might surprise you. A huge chunk of any country's debt is usually owned by its own people and institutions. See these slices? You've got the domestic public, that's things like pension funds and retirement accounts. Then you have the country's own central bank, other banks, and then, foreign countries. So here's the wild part. A nation often owes a ton of money to itself. Let's make this super concrete. The creditors, they're the pension funds that need to make safe investments to make sure your grandparents get their retirement checks. They're the banks where you deposit your paycheck. They're the insurance companies that invest the premiums you pay every month. And get this, if you have a retirement account or any kind of investment fund, there is a very, very good chance that you are a creditor to your own government, and maybe others around the world too. Now, for the most part, this system of global collective trust actually works incredibly well. But it's not invincible. It can be put under massive stress, especially during a big global crisis. And that's when you really see how strong or how fragile that trust actually is. You can almost see it as a cycle. In the good times, governments borrow, confidence is high, everything's great. Then, bam! A shock hits the system.
a pandemic, a war, something huge. Suddenly, the lenders all get nervous. They start asking, am I going to get my money back? And that makes it way harder and more expensive for governments to keep borrowing. That's when you see the central banks and governments rush in with emergency plans to try and calm everybody down.
And this gets to a fundamental truth in economics. Trying to manage an economy can be like playing a game of whack-a-mole. The intention is always good. You want to create stability. But every time you make a rule to solve one problem, you create a whole new set of incentives. You hammer down one risk over here, and another one you never even saw coming, pops up over there. It's a constant balancing act.
And there is no easy answer to this. You basically have two camps. On one side, you have the pragmatists. They say, look, we have to be flexible. We have to do whatever it takes to stop a complete financial meltdown. But on the other side, you've got the purists. And they worry about something called moral hazard. They're saying, hey, if we keep bailing everyone out, people are just going to take bigger and crazier risks next time because they know they'll be saved. Both sides have a totally valid point, and that's the tightrope that policymakers have to walk every single day.
So let's bring this all back home. We started this whole journey looking for some big, mysterious creditor pulling all the strings. But what we found is that the real story is about this huge, interconnected system, and it's a system that you and I are a part of.
So if you remember one thing, let it be this. The entire global debt system is held together by an invisible but incredibly powerful force: collective trust. It's the combined trust of millions of fund managers, bankers, and regular people all making a bet that a government's promise is good. The system's power doesn't come from one single source. It comes from everywhere, all at once. This is such a brilliant way to put it. You know, laws can be changed, regulations can be rewritten, but the memory of a crisis, the memory of who got bailed out and who didn't, which promises were kept and which ones were broken, that stuff sticks around in the market for decades. And that deep institutional memory shapes how everyone behaves the next time things start to look shaky.
So what are the big lessons we can pull from all this? First, even tiny rule changes can have massive, unexpected ripple effects. Second, to be credible, you need a mix of tough, clear rules and the flexibility to bend them in an emergency. Third, if you really want to know what's going on, watch the spreads, the little gaps between interest rates. They tell you where the stress is building. And finally, and this one is so important, yesterday's emergency measure has a funny way of becoming today's standard procedure.
So, in the end, we kind of need to reframe our original question. Asking who is the creditor sends you looking for a person, maybe even a villain. But the much more useful, much more empowering question is, how does this whole system of credit actually work? Once you understand the mechanism, the who becomes a lot less important. And the cool part is, you can start to see this system working all around you. Just start noticing the rules, tax rules, credit card rules, that shape your own money. When you hear about interest rates in the news, pay attention to the gap between them. And next time you see some big financial report, skip right to the end and read the tiny print in the footnotes. That's almost always where the real story is hiding. It's like seeing the hidden wiring of the world.
So we'll leave you with this one final thought to chew on. We've established that this entire vast global system isn't built on gold or armies, but on the fragile, very human foundation of collective trust. And that brings us to the most important question of all. In a system like that, what is the single biggest threat to its foundation?